Welcome back to our series on the psychology of execution. In our last session, we discussed fear, specifically the fear of losing a small profit, which causes us to sell our winners too early. We talked about the pain of watching a stock rally after you have exited, but today we must explore the opposite end of the emotional spectrum. We must talk about the emotion that is perhaps even more destructive than fear. We are going to talk about greed. If fear is what stops you from entering a trade, greed is what stops you from ever leaving it. Fear feels bad. Your stomach churns, your palms sweat. You want the feeling to stop. Greed, however, feels wonderful. Greed feels like euphoria. It feels like dopamine flooding your brain. Imagine the scenario: you bought a stock at $50. It goes to $100. You felt the urge to sell, but you resisted. You let the winner run. Good job. Now it hits $150, then $200. It is going parabolic. The financial news is talking about it every day. Your friends are texting you, asking if they should buy in. At this moment, you don't feel anxiety. You feel like a genius. You feel invincible. You look at your brokerage account screen, and you see a number that could change your life. And this is exactly where the danger lies. When you are in a state of financial euphoria, your brain's prefrontal cortex, the part responsible for logic, planning, and risk assessment, essentially shuts down. It is hijacked by the primal reward centers of your brain. You stop analyzing the asset. You start dreaming about what you will buy with the money. You mentally spend the profits before you have clicked the sell button. And because the feeling is so intoxicating, you do not want it to end. Selling the stock means the party is over. It means returning to reality. So, what happens next? You fall into the trap of moving goalposts. Before you entered the trade, your plan was to sell at $150. That was your rational target based on analysis. But now that the price is actually at $150, that target feels too small. It feels insulting. You tell yourself, the situation has changed. This is a new paradigm. If it got to $150 so easily, surely it can get to $250. You erase your old target and draw a new, higher one. You convince yourself this is letting winners run, but it is not. It is greed masquerading as strategy. You are no longer trading the reality of the market. You are trading your own imagination. Then, the inevitable happens. The music stops. The trend reverses. The stock drops from $200 back down to $175. What is your reaction? Do you sell now to protect the remaining massive profit? No. Greed shifts into denial. You say, it's just a healthy pullback. I'll wait for it to get back to the high of $200, and then I'll sell. You are now bargaining with the market. You feel entitled to that peak number you saw on the screen. The price drops to $150. You are still up 200% from your entry. It's an amazing trade, but you feel miserable. Why? Because you are not comparing $150 to your entry of $50. You are comparing it to the peak of $200. You feel like you lost $50, so you hold. You freeze. You pray for a bounce that never comes. Eventually, the stock returns all the way to where you bought it. You took a round trip. You watched life-changing money appear and then vanish, all because you wanted just a little bit more. The psychological damage from a round trip is profound. It creates bitterness and a desire for revenge against the market. So, how do we execute selling at the top? How do we defeat euphoria? You must accept a hard truth. You will never sell at the exact top. Trying to tick the absolute peak is an exercise in ego, not finance. The goal is not to catch the exact top. The goal is to capture the meat of the move. To do this, you must learn to sell into strength. This is psychologically incredibly difficult. It means selling when the chart looks its best. It means selling when everyone else is buying. It means being the only sober person at a drunken party. The best way to execute this is the same way we handle buying. Break it into pieces. Use a tranche system for selling. Your analysis said the target was $150? Fine. When it hits $150, sell 25% of your position. It keeps rallying to $175, sell another 25%. It goes parabolic to $200, sell another 25%. By selling on the way up, you are satisfying two needs. You are locking in real life-changing wealth, but you are also keeping a small position. So if it does go to the moon, you don't feel the FOMO of missing out entirely. You must have these exit rules written down before the euphoria hits. You cannot trust yourself to make rational decisions. When your brain is swimming in dopamine, a drunk person should not drive, and a euphoric trader should not decide when to sell. You have to be willing to leave some money on the table. There is an old saying on Wall Street: bulls make money, bears make money, pigs get slaughtered. Don't be a pig. Be satisfied with an incredible win, even if it wasn't a perfect win. Mastering greed is much harder than mastering fear, because greed feels so good while it is happening. But to execute consistently, we cannot rely on how we feel, whether it's the fear of entry or the euphoria of the exit. We need something more reliable than fleeting emotions. We need a framework that works every single day, regardless of our mood. This brings us to our next chapter. We are going to move away from specific emotions like fear and greed and talk about the engine that powers long-term success. Next time, we will discuss discipline versus motivation in trading.